Hi everyone, welcome back to PIS. As promised yesterday when we spoke, I did say that today I'll talk about NRO and NRE and investment opportunities for NRIs in India and how we should go about this. And at the end of it, I'll pitch my idea why you should definitely look at this. So first of all, you must understand what is NRI. NRI under the law, Foreign Exchange Management Act, FEMA. A non-resident Indian is called an NRI, a person of Indian citizenship who resides outside India for a certain duration of time, work, business, study, etc., whatever. As an NRI, Indian banks will not allow you to run a normal resident savings account because you're outside India. Instead of that, you have to operate a special NRI account, depending on where your income is coming in. If it's coming in from abroad or is it coming in from India and what you plan to do with that money. So all of these things come together when you have to deal with an Indian bank. So once you become an NRI, these non-resident account types will become very relevant, and that is where we're jumping into now. So you have two accounts. You have the NRE and the NRO accounts. So what are they? First, let's discuss this. An NRE account is a non-resident external account. This is meant for income that you earn abroad, foreign earnings that you deposit in as foreign currency that is converted into Indian rupees, INR. Both principal and interest are fully repatriable, meaning you can send back the money outside India abroad at any time. The interest is earned tax-free in India and it's suited for channels like for your overseas income coming into India, and you can use it whatever you retain in India, whatever you want to do with it, and then you can take it back out whenever you want. So that is the NRE. There are certain rules when it comes to NRE investments, which I'll get into next.
In between our soliciting, sir. Interest income interest
அதான்டா அதான் சொல்ல வரேன்டா சரியா பாண்ட்ல அதான்டா இல்ல அதான்டா நான் ஐம் கமிங் டு நெக்ஸ்ட்னு ஃபுல் வீடியோ பார்க்க போடுறா ஓ ஐ NRO, non-resident ordinary account. I got Albin off screen lecturing me, man. So this is for your income earned in India, like rent, dividends, pension, income property, sale proceeds, all the deposits which you can make, and which is all in Indian rupees. Of course, you can deposit your foreign currency also into the NRO account, but the withdrawal from this account can only be in rupees. So whatever enters into the NRO is converted and it's permanently stuck as rupees. You cannot freely convertibly take it back and forth. The interest income in your NRO account is taxable in India. The banks apply a TDS, tax deduction at source, on the interest. You can repatriate this, but there are limits, and this is where it gets sticky. As per the rule, up to $1 million in a financial year can be sent back abroad from an NRO account, but with proper documentation. That is the most critical thing. An NRO account can be jointly held with a resident Indian too, a close relative, whereas an NRE account can only be held with another NRI. It can't be held with a local. So why did RBI do this? Why did we have to have two accounts like this and have this really complicated affair? Well, there are two separate accounts because the FEMA and RBI wanted to segregate foreign earned income that's brought into India, which is the NRE, and Indian earned income, which is a domestic recipient, which is via the NRO. So they wanted to keep these two separate, the system track foreign exchange flows, and keep an oversight on how these things are repatriated, because our rupee is not, fully freely convertible as we think. So in practice, many NRIs maintain both a foreign income flow account, the NRE, and they have an Indian account, which is the NRO. In the middle of all this, now we get to the interesting part about investing, which brings us to the third thing, the trifecta, which is the PIS. So if you are an NRI and you have an NRI investment you wish to do in India, in that too in Indian equities or securities, you cannot just open a regular account and start investing. You need to facilitate an account with the portfolio investment scheme governed by the RBI. What is the portfolio investment scheme, or the PIS in short? It's a regulatory mechanism through which NRIs can invest in India, in Indian shares, and through recognized stock exchanges. So to invest via PIS, you must open a PIS-linked bank account. So you have an NRE PIS account and you have an NRO PIS account, plus a demat account and a brokerage trading account with a registered broker. So now I've taken this to another level of complication. We were already complicated, right? You are an NRI. then you have two accounts, one for foreign money and one for Indian income. Now, if you want to invest, you just can't start investing right away. You have to open another special relationship with the PIS, which is the Portfolio Investment Scheme governed by the RBI. All this is just to keep track of the currency. That's about basically why do they have these things is they want to see every dollar coming in and going out. They want to keep an eye on it. Rightfully so. So if you have an NRIPS account, you can invest and they can be taken back. The profits can be taken back and sent back abroad. But an NREPIS account is only allowed to invest in equity market. You're not allowed to invest in debt market, even in debt funds. So even if you have a hybrid fund, mutual fund, which has some equity, some debt, an NRE cannot invest in it. An NRE account cannot invest in it. That is why you have to have an NRO account. An NRO account allows investment in debt and debt instruments because the currency changes to Indian rupees and then you can invest. And of course, taxation is much higher. You'll be taxed at 30% right at the get-go, right? And you have to file your papers and you have to ask the government to return because they do give tax breaks if you file your paperwork. And you can also withdraw the money back from an NRO and repatriate it outside India by sending the money from the NRO to an NRE account and taking it out. But if you only follow the rules and regulations of doing paperwork and getting certifications done, and as auditor also has to certify and sign it all off. So that is also there. So because of all this, people get worried, can I take my money out? If I make a bond investment through the NRO, can I take the interest money out? Yes, you can. As long as you have followed all the rules and regulations. And that's where, people like me, my team can help you guys out and make sure that you do the right things and you do dot the I's, cross the T's. And if you do all those right things, you can definitely take your money out of India. But you cannot treat your NRO like an NRE account. Please remember that. You cannot park money in an NRO account because restrictions are there for outbound and taxations and all these things. And there's a lot of paperwork in it. So keep that in mind. Now, why am I talking about all this now? A lot of you have cash outside India and you do not know what to do with it because right now you don't want to put it in equity market. You want to keep it in something, safe and liquid. So you look at government securities. Government securities, even in the UK, in the US or Europe, anywhere they give around 4 to 5%. That's the yield, usual yield. But in India, these bonds which I'm talking about offer a 10 to 11%. But a lot of you immediately will turn around and say, but Indian rupee is depreciating all the time, Vinod. And if I just keep it as dollars, it's appreciating. So there are some fundamental maths you should look at before you get into this argument. So let's say you buy a dollar bond, invest in dollar securities, treasury bills. You're getting 4%. Instead of that, we have moved it to an NRO account, converted it, and you're getting 11%. In a year, worst case, you may lose 3 to 4% on currency depreciation. So from that 11%, you remove 3 to 4%, you stand around 7 to 8%, which is already double what you're making, right? Compared to an American treasury bill, T-bill, or a British gilt security, whatever you want to look at. So you're making almost double. But here we take the interest and we're reinvesting it into equity. And that is compounding even more. So if you look at it over a long period of time, you're getting interest in your bonds, taking and putting it back into equity, you're compounding on both sides, which will definitely beat any government security you're holding. And like I said, if you do your paperwork, you can take it back. Of course, 30% is taken away, the interest is taken away before you're paid. But like I said, if you do the paperwork and you file your taxes, you'll get that cash back. And up to 1 crore is not a problem. It's all very doable and very easy. And most of us who are watching this video, 1 crore is a lot of money for us, and that's a pretty big exposure. And I would say that covers most of us. If you're going past 1 crore, we do have other ideas. We have people like Alvin who have come out with some great ideas, which we can talk about in person, because I don't think we need to do a video about some imaginary number. Even I'm not there yet. But anyway, digressing. So this is why I'm saying investing in a bond through this method works, and it's very doable and it's very easy. And I've answered the question. The dollar converts to rupee, is invested, and you can take it back outside as dollars. And why I'm saying it? Because you're almost getting twice, at least twice, if not more, in terms of interest. So this is just normal common sense to me, if you ask me. Of course, there's another thing which you should keep in mind. In places like Europe, Sweden, UK too, whatever you earn outside, you have to declare it locally in your taxation there. And I'm sorry for that. Just because you live there and you earn there, I can't help that. I can't give you any recourse there, but you will have to declare whatever you've invested in India, you're earning in your NRO account, you'll have to declare it there, and you'll probably have to pay some nominal tax there too, depending on which country you're in. Keep that also in mind. You cannot escape that tax. But still, I think net you'll still stand to gain, because even if you're collecting 4%, 5%, you still have to pay tax on that. So taxation there is on anything you earn, especially in UK now, considering where their country and economy is right now. I can understand that. So this is what I want to talk about today, how NRO, NRE works. I hope this gave you a lot of clarity. I'm sure you have a ton of questions about this. I'm there on WhatsApp. I'm there on Instagram. Reach out to me. I'll ask Karthi to put my Instagram handle here and some WhatsApp QR code somewhere there. You can scan or hear Karthi saying, do this, don't this, sir. This is rude. Do this. Go down. Get down with it. Okay, so anyway, jokes aside. So I'm sure you'll have a lot of questions. Reach out to me and I will try and answer them. I do love having conversations with you guys, especially when it's one-on-one. I find that much more fruitful. Thanks for watching videos today. Have a wonderful Saturday evening, and I'll see you tomorrow with something interesting and motivational, I hope. Bye.